Hey everyone, welcome back to the channel. Today we've got a pretty big topic to cover, one that might just redefine how governments, institutions, and everyday investors look at digital assets. It's coming from the one and only Michael Saylor. So he just released a new framework for digital assets, and from what I've read, it's basically a blueprint for how major institutions can understand and classify cryptocurrencies in a way that feels less like the Wild West and more like a legitimate financial market. Before we get into that, though, I want to focus on something else that's been on my mind, and it's probably been on your mind as well. We need to talk about Bitcoin's shrinking supply and how that interacts with the massive new demand coming from some of the biggest players in the world. If you've been following this channel, you know that I'm always looking for signs that the market shifts, whether that's in equities, real estate, or crypto. And right now, crypto, especially Bitcoin, is setting up for what looks like a serious supply crunch. Let's quickly break down Michael Saylor's framework. Essentially, he's giving institutions a roadmap for adopting digital assets. He's focused on the purpose of utility of each token, regulatory clarity considerations, and strategies for incorporating them into the balance sheets of major companies. This matters because the more structure and clarity we have, the easier it is for big money players like pension funds and even governments to jump into the market. That leads to fewer and fewer Bitcoin for the rest of us, and I'll explain why. But first, in section 5 of his framework, Saylor claims that digital asset market, that it could grow from its current size of roughly $1 trillion all the way to $590 trillion, with the United States dominating much of that market and much of that growth. In his view, if the United States is strategic about how it fosters this innovation and creating a favorable regulatory environment, it can attract immense amounts of capital that would essentially position America as the leading force in the digital asset space, from Bitcoin to Ethereum and everything in between. He's not just throwing out some random figures either. Saylor's argument is that digital assets could eventually integrate into, or even transform, almost every facet of the global financial system: bonds, equities, real estate, and beyond. So by taking essentially taking a leadership role in this technological shift and economic shift, the U.S. could set the standard for how digital assets are issued, traded, and regulated, effectively steering the direction of an industry that he believes might one day rival the entire traditional financial system and financial market combined. So getting back to the supply crunch, right now there are about 19 million Bitcoin that have essentially been mined so far. But many people estimate that around 3 to 4 million Bitcoin are lost forever. Now, think forgotten wallets, discarded hard drives, things of that nature. So we're looking at maybe 15 to 16 million coins that are effectively out there that governments are starting to scoop up. If these governments around the world collectively buy, let's say, 2 million Bitcoin, we're suddenly down to only 13 million Bitcoin for the rest of everyone else. And that's not even counting all the coins already in the hands of, long-term holders who aren't looking to sell anytime soon. Now, let's bring ETFs into the consideration. We've already seen 380,000 Bitcoin get snapped up off the market. And that's just the start. BlackRock and other large institutions are recommending about a 1 to 3% portfolio allocation into Bitcoin. So think about the size of this US stock market for just a moment, which is around $55 trillion in market cap. Even 1% of that going into Bitcoin would be $550 billion. Comparing that to what flowed into the market this year, which was only $38 billion. And 3% would be a staggering $1.65 trillion. That's an enormous demand for a shrinking supply asset like Bitcoin. On top of that, we have the Bitcoin halving cycles. Let's recall what happened in 2016. So the block reward dropped from 25 Bitcoin down to 12.5 Bitcoin, which effectively cut the new supply in half. And that meant that about 657,000 Bitcoin never made it to market over the next 4 years. Coins miners would have sold if the reward had stayed higher. With steady buy pressure still rolling in, the price exploded like a spring with half of its weight suddenly removed. Now the same dynamic is about to happen again, except this time we have even more buyers. ETFs, institutions, governments, who might push prices up faster than we've ever seen before. Moving on to government adoption in more detail, there's a bill proposed by Senator Cynthia Lummis suggesting that United States could purchase up to 1 million Bitcoin for strategic reserve over the next 5 years. Even if we don't know exactly how that might play out, the fact that mainstream politicians are proposing something like this, it speaks volumes. And if the United States starts stockpiling Bitcoin, you can bet that other countries will follow to remain competitive. That could be another 1 million Bitcoins collectively purchased around the world, 2 million Bitcoins off the market and on top of whatever's already been lost or in long-term storage. So let me really underscore this point. We're seeing world governments looking to start adopting Bitcoin as a strategic reserve asset. We're seeing the largest companies in the world, such as BlackRock, start tokenizing real-world assets onto Ethereum. Sony and Samsung are starting to build their own layer 2 solutions and on ecosystems on top of Ethereum, potentially onboarding millions of users overnight. If that's not the start of a crypto supercycle, then please tell me what is. I honestly can't think of a bigger potential buyer than world governments, global giants like BlackRock, and the biggest tech firms around the world. Historically, past Bitcoin bull runs have mostly been driven by retail investors and some whales, of course, but now we're dealing with entire governments, institutions, and mega corporations that changes the game completely. Each Bitcoin halving has been big news on its own, and now we have this added buy pressure from institutional adoption, regulatory clarity, and tokenization of real-world assets, and it's easy to see why this might be the start of a once-in-a-lifetime crypto supercycle. Now, shifting focus a little bit to Ethereum, while Bitcoin is often considered digital gold, Ethereum is much more like digital oil. It powers all sorts of decentralized applications. We're witnessing the tokenization of real-world assets onto Ethereum, which could bring trillions of dollars of liquidity if it actually takes off, which I believe that it will. Companies like Sony, Samsung are starting to build their own layer 2 solutions on Ethereum, and I believe they're going to onboard massive user bases that they already have almost overnight. Each one of these users is going to end up needing their own wallets. They're going to need to pay for gas, potentially hold Ethereum. Even if transactions are relatively small, the cumulative effect of millions of users can be monumental. It all compounds and grows the network effect. That's the level of mainstream adoption that far surpasses anything that we've seen in earlier crypto cycles. So putting all these pieces of the puzzle together, here's why I believe we're on the edge of a true supercycle. Bitcoin's supply is constrained by design, but now it's even smaller due to the lost coins and strategic government buying. ETFs are soaking up hundreds of thousands of coins every year, while halving events continue to reduce the number of new Bitcoin being created. Meanwhile, Ethereum is powering an entire ecosystem of tokenized real-world assets and layer 2 solutions that could onboard millions of users in one shot. A convergence of decreasing supply, surging demand, and institutional acceptance is setting the stage for something absolutely extraordinary. Are we truly at the start of a supercycle? My gut says that we are. In fact, how could we not be? If we aren't at the start of a supercycle, then you have to tell me who's a bigger buyer than world governments, the largest mega corporations on the planet, and pension funds. There isn't one. This has to be the start of a crypto supercycle, or it's just all nonsense and we're all just dreaming. But my gut says that this is it. But it's all still speculation. Markets can turn on a dime and regulations can shift. Politics can complicate things, yet the sheer momentum that we're seeing from the biggest wealth managers and corporations and governments, it seems unstoppable at this point. Even if short-term dips and corrections do occur, which they, in every single market they do happen, the long-term trend still appears overwhelmingly bullish. Every day more infrastructure is built, more money is allocated, and more real-world use cases are being built and unveiled. So what do you think? Do you believe the governments are actually going to start loading up on Bitcoin in the coming years? Will ETFs smash previous year's records of inflows and adoption? Or is this all just another hype cycle that will eventually lose steam when the next piece of bad news happens? Personally, I'm leaning towards the long-term bullish side of things, but I'd love to hear your perspective as well, so leave that down in the comments. And that's pretty much it for today's breakdown of Michael Saylor's framework, Bitcoin supply crunch, and why it might be setting the stage for a true crypto supercycle. We covered the halving dynamics, world government adoption, and the massive role that ETFs and institutional players could be playing in the coming years. On the Ethereum side of things, we covered real-world assets, tokenization, and corporate layer 2s. Solutions could be the spark that pushes mainstream adoption, far beyond anything that we've ever seen so far. If you made it this far, thanks for sticking around. I appreciate each and every one of you for taking the time to listen. If you enjoyed this and found it helpful, please smash the like button, hit subscribe, and share this with someone who needs to hear more about the potential supply squeeze of where we're headed. And as always, stay informed, stay safe, and I'll catch you in the next one. Y'all take care.